Today on Fear and Greed, the Reserve Bank leaves rates on hold and says it still won't rule out rate hikes. Voting continues in the US election with a late momentum shift to the Democrats, and the longtime boss of Domino's steps down. Plus, more on markets and why the Commonwealth Bank wants to be a marketing agency for other companies. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Wednesday, the 6th of November, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, the Reserve Bank has left interest rates steady and forecasts that headline inflation will fall more and stay in the central bank's target range until the middle of next year.
But that doesn't mean there's a rate cut around the corner. It's the second last meeting, or it was the second last meeting of the year. And of course, the 12-month anniversary since the last time the Reserve Bank lifted interest rates. The most important commentary from the central bank yesterday came around underlying inflation. That's the rate the RBA likes to think about when it is setting interest rates. It remains too high, was how they put it. It won't hit 3% until the middle of next year, and it won't be until the end of the following year, where it's down in that 2.5% range in the midpoint of its target range. That's according to the Reserve Bank forecasts. Underlying inflation is, and I quote again, easing more slowly. The labour market remains tight and total demand for goods and services still exceeds supply. This concept of aggregate demand and aggregate supply, that's what the Reserve Bank seems to be interested in at the moment. The low headline rate is due to energy rebates, $75 a quarter. That will jump back up in 12 months' time or so, or a little less than that, when those rebates cut out. At least the board didn't consider hiking interest rates. I suppose we should be happy about that. The Reserve Bank also released its statement on monetary policy. Basically, it revised slightly higher its economic growth forecast for next year. That's thanks to the stimulus packages out of China recently. Wages growth will slow, unemployment will rise. Now, while inflation and employment are the keys, the Reserve Bank talked a bit about the risk to household spending not being as strong as expected and uncertainties around the global economy. They seem to be the main reasons why the bank might think about cutting rates sometime sooner rather than later. But I wouldn't hold your breath for either of those two outcomes.
Okay, then. So what does it mean then, Sean? After all of this yesterday, when are we actually likely to see a rate cut? Can you kind of narrow it down at all?
What the bank didn't do yesterday is lean in towards commentary on rate cuts. We were talking about that earlier in the week, leaning in. The mantra just remained not ruling anything in, not ruling anything out. Michelle Bullock said there are just some things at the edges that suggest there might be a little bit of upside risk. That's not what we wanted to hear. Commentators are basically saying now banks are firmly in neutral on rates. Michelle Bullock wouldn't be drawn into the impact of the US election, saying we'd have to wait and see who wins. Bond markets have tempered their bets just a bit on a rate cut. February's a chance, but it's more likely towards the middle of next year. According to economists, bond investors have priced in about a 40% chance of a move in February. The Aussie dollar held just under 66 US cents after the announcement. That sort of supports the theory that rates won't move any time soon. So, best bet, February at the earliest, middle of the year. I was going to say at the latest, but first half of next year. That's what I'll say, Michael.
I love how even you are kind of hedging your bets a little bit
I am.
on this one.
I've been a middle of the next year person for a while now, but yes, we'll wait and see. I tell you who does know, or who thinks it might be February next year.
Is it our guest today?
It is our guest today. It is Lucy Ellis, the chief economist from Westpac, former chief economist at the Reserve Bank, Michael.
Yeah, I love your interview with Lucy. It comes up after the show because she does have a unique insight into basically what the Reserve Bank means, because half the challenge is decoding the language, isn't it?
Yeah.
And she's an expert at it.
Yeah, well, she spent time writing the language.
Yeah, it is a great chat. It's coming up after the show. Stick around for that one if you want to get an insight into exactly what the Reserve Bank means when they say various things. Sean, moving away from the RBA, voting continues in the US election with what appears to be a last-minute swing to Kamala Harris and the Democrats.
Donald Trump is ahead, though, according to the bookies. So I wouldn't say there's a favourite at this point, but that last bit of momentum seemed to swing towards Kamala Harris. More than 72 million postal votes or early voters had recorded their decision by the beginning of the polls opening last night, Australian time. More women than men had actually voted earlier. Kamala Harris's final event was in Philadelphia. She had a couple of events in Pennsylvania, one with Katy Perry, another with Oprah Winfrey. Lady Gaga was there. The stars have really come out to support Kamala Harris. Donald Trump was almost sentimental about his last ever rallies. He said he's been doing it for 9 years, and this was it. Podcaster Joe Rogan, he came out and said he'd be voting for Donald Trump. I suppose Trump's big line yesterday was that he would liberate the US from what he called an occupation. He's going out swinging, whether he wins or loses. Pennsylvania is where they both were, the crucial swing state, 19 electoral college votes. Unlikely to know a result for a few days yet, Michael.
It is a massive, massive day, Sean. We'll take a quick break. We'll be back in a moment with the rest of the day's business news. Sean, the curse of the founder CEO has struck again, with Domino's longtime boss, Don May, stepping down after 22 years running the company.
Yes, he's been with the company 40 years. He was CEO since it listed in May 2005, making it the first pizza company to hit the bourse. He actually started as a pizza delivery driver in Redcliffe, up in Queensland. Been a rough couple of years, though. The share price is down nearly 50% this year, including 6% yesterday. Since the end of COVID, it's gone from about $160 a share to just over $30 a share. Same-store sales in the first 17 weeks of this year were down, very much on the back of their French and Japanese stores. They're just not closing. They're not performing very well, and as a result, they're going to close about 10% of stores. The Australian business is actually doing okay. The chair of Domino's is a guy called Jack Cowan, a billionaire. He holds 26% stake. The new CEO, Mark van Dijk, from the Compass Group in the UK. Previously, he was with Coca-Cola. Don May's the third CEO founder to go in the past 10 days. So Richard White from WiseTech Global was the first. He went, though he's coming back as a consultant. Chris Ellison from Mineral Resources is going, though not for 18 months. Don May, however, if you count him as a CEO founder, at least in terms of a listed company, he'll be leaving the business shortly.
Almost seems a bit unfair to group him in with the others, doesn't it? Because there's been none of the governance issues or anything, has there, for as far as Domino's goes?
Sorry, Dom.
Apologies. There's an election in the wind in Australia. Sean, isn't that poetic? Really, almost. There's nothing poetic about an election campaign, is there? It gets ugly very quickly. The Prime Minister, Anthony Albanese, is telling colleagues he's confident of winning an increased majority. So not just winning, but winning an increased majority at the next election, which is, of course, due by May.
Yes, notwithstanding polling suggesting a minority government for the ALP after that election.
That's confidence.
Yeah, it is. It is, absolutely. It's the third last parliamentary sitting week of the year. The Prime Minister told Labor MPs that they need to set out the government's next agenda for the next term in Parliament. There'll be key policies announced over the next few months. Plenty on education this week, of course. The big one being wiping out 20% of student debts. Yesterday, the Prime Minister said he'd set up a commission to set the price of university courses, a bit of a backflip from what the Morrison government does, but we can expect quite a bit of campaigning over the next few months.
Opposition leader Peter Dutton has told his colleagues to steer clear of the debate over abortion, saying that it cost the Queensland LNP votes in metropolitan seats, really, in the recent state election.
That's right. In the final weeks of the election campaign in the Sunshine State, LNP votes in the cities fell, according to polls. That, of course, coincided with the debate over abortion. The fear for Peter Dutton is that the ALP will make it a topic in the run-up to the federal election. Mr. Dutton said he believes Prime Minister Anthony Albanese is in election mode. He said that seats could be decided on local issues and hotspots, hence he doesn't really want to be drawn into the abortion debate.
And one last one from politics, Sean. The travel scandal is not going away, with a growing number of MPs saying that flight upgrades should be banned.
Yeah, so Independence Allegra Spender and Helen Haynes said they will cancel their Qantas Chairman's Lounge and Virgin VIP memberships as well. So it's not just the flight upgrades, it's also these memberships to these very flash lounges. Teal independent Monique Ryan, she's already given up her chairman's lounge. She basically put the blame on, well, she didn't want to be in the chairman's lounge because of the insidious activities of lobbyists. There you go.
I don't want to paint you into a corner on this one, but I'm looking forward to you teeing off on this story in the Fear and Greed newsletter today.
Yes.
You,
Delighted to do so.
Oh, lovely. Excellent. If you haven't subscribed already, head along to fearandgreed.com.au, pop your email address in. It's entirely free, and you get to hear Sean's unadulterated innermost thoughts on all of these stories. It's worth it just for that. It gets a bit dirty. It doesn't actually. I don't know why I said that, Sean.
Really? No.
Anyway, it might today. How did local markets perform yesterday? Help me out here.
Yeah, well, the S&P ASX 200 finished down 0.4% to 8,132 points. Utilities and financials were among the worst performers, in part reflecting the interest rate decision and commentary. Westpac and Macquarie were both off more than 1.5%. In fact, 17 of the top 20 stocks were lower. A couple of interesting ones. The share price of Mineral Resources bounced. That's after that 10% drop on Monday, up 4% yesterday. Lifestyle Communities rose after HMC Capital took a near 3% stake in the leased communities operator. Lifestyle was up 7%, best of the top 200 yesterday.
Now, I mentioned this at the top of the show. Commonwealth Bank will build a media arm that will compete with broadcasters and billboards to sell space to advertisers on its branches, ATM screens, and mobile apps. This is new.
Yes, kind of new. Well, certainly new for a bank. They're calling it CommBank Connect. It's part of a marketing push in which they've already signed up brands Qantas, KO Sports and Myer, where they'll run their ads within the CommBank's ecosystem. They're going to build 2,000 digital screens inside and outside Commonwealth Bank's 600 branches across the country, according to the FIND review. They're not going to make money from it, they said, but they will use the money to pay for their own advertising. So I think they are making money from it, but anyway, owned media is a big thing. Owned media is about companies selling access to their customers. It's worth an estimated $4.3 billion. What Commonwealth Bank wants to do is actually use things like its app and its website to potentially promote some of these other players like Myer and KO. Woolies, Coles and Chemist Warehouse already do it. They charge suppliers for prominent spots on in-store screens, radio stations, magazines, social media, and Commonwealth Bank is joining the party.
Turning to international news now, and markets are still really in a holding pattern globally ahead of an outcome from the US election. God, that's optimistic of me, isn't it? Like the polls haven't even closed yet. I'm already talking about an outcome. Like I'm impatient for a result. Though the apparent late swing towards Kamala Harris has put some pressure on Wall Street.
The so-called Trump trade, which pushed up equities on Wall Street, the US dollar, Bitcoin, bond yields, that's sort of been unwound a touch. Gold steady, that's still trading around record high levels. Everyone really is waiting to see the outcome of the election. Oil's higher, though, after OPEC Plus agreed to push back its December production increase, and Iran outlined a possible response to Israel's recent attacks. It's back above $75 a barrel. Worth a mention, Nvidia. For a while, it was again the biggest company on Wall Street, at least for a few hours. It was worth about $3.38 trillion US. It jumped after an announcement that it would replace Intel on the Dow Jones Industrial Average. Now, the Dow Jones Industrial Average has 30 stocks on it only, and they're the biggest 30 stocks on Wall Street. Intel is out. Nvidia's in. People just backed the Dow Jones Industrial Average. So that gave Nvidia some help there. Pushed Apple to number 2, just below Nvidia, though in after hours trading that reversed again. But, briefly, it was there.
Briefly. God, you would have to celebrate quickly, wouldn't you, if you're at Nvidia?
You would.
Like, you'd barely even have time to do a LinkedIn post about it. It's already passed. How about this one, Sean? This is really disturbing. European and US intelligence officials believe Russia is behind a plan that would ultimately place essentially explosive devices on planes to North America through air cargo shipments. This is according to a report on Bloomberg.
Authorities are taking the incidents seriously And intelligence agencies are expecting Moscow to try and stage similar acts of sabotage in the future. An unnamed source is quoted as saying, Poland's National Prosecutor's Office said it's investigating the alleged involvement of a foreign intelligence service in sabotage activities on the territory of Poland and other European Union member states. The Wall Street Journal reported earlier in the week on Moscow's alleged goal of ultimately targeting the US. Now, as part of an inquiry, authorities have arrested 4 people linked to a sabotage group whose activities included sending parcels containing camouflaged explosives and dangerous materials via courier companies to countries in the EU and the UK. The parcels would ignite or detonate during land or air transport. A very worrying story, Michael.
Indeed. Up next, Sean, is the Fear and Greed Daily interview with Lucy Ellis, Chief Economist at Westpac. Well worth a listen. It is coming up in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you very much, Sean.
Thank you, Michael.
It's Wednesday, the 6th of November, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.